it's not really gold that is strong. It's just that they're going to continue and by they I mean the central bankers and the governments to inflate the system because that's the only thing they can do in order to keep the system going. All fiat currencies are going to sink, and that you can only devalue really versus gold, because devaluing against other fiat currencies is just like a ping pong or a table tennis game. One currency would devalue against the dollar, and then the dollar would devalue, and they're all like playing that game. But the ultimate way to devalue is versus gold. That's why gold is actually more than doubled since 2008.
2023, gold surged significantly, marking its most substantial annual gain in 3 years, showcasing remarkable strength throughout the year. As 2024 begins, gold has risen by 13%, driven by dovish US rates, geopolitical tensions, and increased central bank purchases. Currently trading at $2,062, gold faces a slight decline, testing technical levels, immediate resistance at $2,088, with further resistances at $2,106 and $2,131. Support levels stand at $2,050, $2,018, and $1,993, potentially buffering against price drops. The overall outlook remains tentatively bullish above $2,059, with traders and investors closely monitoring these indicators for the metal's future trajectory. Mario Inco highlights that until recently, gold appeared confined within the $1,800 to $2,000 range since 2020, occasionally dipping to $1,600. However, indicators such as potential rate cuts and economic turmoil in the US and other nations facilitated gold's breakout from this range. November witnesses a new monthly close above $2,000, reaching around $2,040, signifying a significant shift for gold, notably considering its long-term performance dating back to the 1970s, as seen on logarithmic charts. This surge isn't solely due to gold's inherent strength, but rather stems from continuous efforts by central bankers and governments to stimulate the system. Mario emphasizes that as fiat currencies weaken, their devaluation against gold becomes inevitable. In this context, gold serves as a critical indicator, signaling the universal decline in the value of fiat currencies. In 2022, total central bank gold buying amounted to 1,136 tons, representing the highest level of net purchases recorded since 1950, encompassing the period since the suspension of dollar convertibility into gold in 1971. Speculation surrounds the potential adoption of gold as a currency or part of a gold-backed currency system by countries, resembling a Bretton Woods-style arrangement where surplus countries could redeem their currency for gold at a fixed rate. Mario envisions a system wherein surplus countries like Saudi Arabia or India could exchange their excess currency for gold, creating a mechanism for stability amid ongoing currency devaluations. We will present clips from Mario Inco's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
Up until recently, it looked like gold was going to stay in that range we've had since 2020, between basically 1,800 and 2,000. I know we went down to 1,600 at one point, but I think with the markets and investors pointing to rate cuts, to trouble in the U.S. economy and other countries, gold has been able to actually break out from that trading range. And on a closing basis, yes, we had a new monthly close above 2,000, new high. I think in November the close was around 2,040. We closed around 2,062, and we had the highest closing for the year, the quarter. So I think it's quite significant for gold. And I think if you look at the long-term charts, especially the logarithmic charts, which take account of percentage change going back to the 70s, gold doesn't look like it's gone up that much in the last few years. So there's still a lot of room, in my opinion. And all that says to me is that it's not really gold that is strong. It's just that they're going to continue and by they I mean the central bankers and the governments, to inflate the system, because that's the only thing they can do in order to keep the system going. All fiat currencies are going to sink, and that you can only devalue really versus gold, because devaluing against other fiat currencies is just like a ping pong or a table tennis game. You know, one currency would devalue against the dollar, and then the dollar would devalue, and they're all like playing that game. But the ultimate way to devalue is versus gold. And I think the Swiss franc will go down as well versus gold. And and that's why the dollar index, despite being around 100, that's why gold is actually more than doubled since 2008. And gold will be the how can I say, the barometer. It's going to point to the fact that fiat currencies are all sinking. And it will not just rise versus the dollar, but it will rise versus the Swiss franc, the pound, the euro, Singapore dollar, the Aussie dollar, all fiat currencies. They have been purchasing, especially like China and all the BRICS countries and global South countries. There's a record purchases, net purchases in 2022. I haven't really, they don't have the official figures yet for 2023, but I suspect it will be very close to the 2022 figure. Yeah, and we have the BRICS as of today. I assume they're expanding, doubling from 5 to 10. As to whether any country will adopt gold as a currency or gold-backed currency, I'm not too sure. But what I think they'll do, it's going to be similar to the Bretton Woods prior to 1971, where if you had a surplus with another country in dollars, you could take that to the treasury and take gold for it at a fixed rate. I'm not sure if they're going to start at a fixed rate, but all it will mean is that if Saudi Arabia has a surplus of yuan, they'll go and redeem that for gold. And let's say India has a surplus of, Brazilian reals, they're going to go and redeem that for gold. That's the way I think it's going to be, and it's not going to be right away. And I wouldn't be surprised if they keep stacking gold again in 2024.
A significant surge in bond prices over 2 months drives fixed income markets, fueled by widespread expectations of imminent central bank interest rate cuts, rescuing the market from a potential third consecutive year of decline. Mario notes the bond market's enthusiastic response to declining interest rates, primarily influenced by central bank interventions, foreseeing a potential trend reversal by year's end. This shift may compromise the bond market's allure, risking central banks' control over consumer prices. Amidst this scenario, central banks confront the difficult decision of raising interest rates, risking economic collapse or lowering them, potentially igniting higher inflation. Meanwhile, the Federal Reserve maintains its key rate for the third time, hinting at future cuts in 2024, while policymakers unanimously vote to retain the benchmark borrowing rate at 5.25% to 5.5%. Mario predicts an intensification of this central bank dilemma in 2024, potentially significantly impacting the stock market and the overall economy. Despite the current stability, the expectation of multiple rate cuts suggests a cautious approach by policymakers, indicating potential turbulence and forthcoming challenges. Let's get back to the interview.
I think it's tough to forecast things. One thing, it's not even forecasting, and it's looking at the fiat currencies. As Voltaire said, fiat paper money always returns to its intrinsic value of zero. And I'm not sure it's going to happen in 2024, but we're going to keep moving towards that zero figure. So that's the only thing I can forecast with certainty. The other one, though, is the bond market. I think there's too much exuberance right now that rates are going to keep going lower, the central banks are going to cut, and that it's safe to be in the bond market. But I think by the end of the year, things will have changed, and it's not going to be a good place to be in the bond markets because I think the central banks will have kind of lost control of prices again. And by prices, I mean consumer prices. Yeah, I don't think they're going to raise again because things were getting pretty disruptive, especially the bond market. Yields are 10-year yield was moving above 5%. But the flip side of the coin is that every time they start cutting rates, it's a signal that there's a stock market correction or crash, that the economy is going to recession. So I guess that's why they are between a rock and a hard place. But it looks like, as I spoke earlier today in my first video of the year, that investors, economists in the mainstream expect a lot of cuts. So it will be an interesting year to experience, I guess. Throughout history, that periods like we are under now, of high inflation, geopolitical, domestic political uncertainty and tensions. Yeah, the general public always gets hurt. I think the other thing as well, when you're in a situation when the currencies get debased so much, the whole of the moral fiber of society gets debased, and crime goes through the roof. You know, the police a lot of times doesn't care anymore because there's so much crime. Yeah, and people get affected. It's not going to be fun. And just think about, a third world country like where I used to live when I grew up in Brazil or Argentina. A lot more crime, a lot more like difficulty getting things done. Yes, strikes. I think we're going to continue to have strikes here because people want better pay, because they're not getting compensated enough to fight the currency debasement. So yeah, it's not going to be easy, and hopefully you will have prepared. And also, I would say that it doesn't last forever, this environment, and that things hopefully will get better.
When confidence in fiat currencies like the US dollar, euro, or Japanese yen diminishes, investors and savers often turn to gold and silver as safer alternatives to protect their wealth. Both are expected to stay bullish in 2024 as hedges against currency devaluation and economic instability. Considering gold's recent surge and the factors influencing it, what drives its trajectory for the future? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.